Hi, my name is Ashok and welcome to my channel Read to Expand. After creating my last video that is difference between saving and investments, I have received very valuable feedback, and I have also received the feedback that I should continue on this particular topic only. Hence, today I'm going to make a session on asset allocation and why asset allocation is a very important concept to understand. So let's begin. In very simple terms, asset allocation is essentially that if you have, let's say, 1,000 rupees, you take a call whether you are going to invest this 1,000 rupees into equity or how much goes into the debt. Broadly speaking, these are the two asset class people start their investment journey, and as they move along, obviously they can add real estate and commodities such as gold. However, I would also like to highlight that people say cash is a king, and that really matters a lot. For example, if you're going in a car and suddenly your car breaks down, and then you need to pay to mechanic to fix your car either with the help of an UPI or through your credit card or debit card or maybe in the form of physical cash, you can't say that okay, I have to liquidate my investment of and then I have to pay you. So cash is always very handy, and that's also considered as one of the asset class. Okay, so let's understand each of the asset class in slightly in detail with the help of an example. So let's talk about the equity. So you have the large cap companies, mid cap companies, the small cap companies, which are listed on the different stock exchanges. So basically, from 1 to 100 are form the part of the large cap companies. From 101 to 250 form the part as a mid cap companies, and 251 onwards, whoever listed are comes under the category of a small cap companies. Then also you can participate into the equity investments with the help of a mutual fund. So you can have the index funds, you can have the multi cap fund, you can have the flexi cap fund, and lot many are there as a category. So through these channels, you participate into the equity as an asset class. When talking about the real estate, of course, residential, we are all aware of it, that there is a residential property. Then there is something called commercial property. And I think, in my personal opinion, the commercial property investment is much more beneficial compared to the residential. Then also, in fact, you have a real estate investment trust through which you can participate into a real estate asset class. Then you can talk about the fixed income. Well, my father, in fact, forefathers have lived with it. Example like FD with the bank, or maybe the post office scheme, or maybe the PPF. Then now talk about the commodity. So commodity, you can have gold as a investment. Or for that matter, now you can participate uh, gold fund as well. So these are the various category of asset class which we have understand with the help of an example. So now let's see what is the kind of risk associated with each one of them. Okay, so it does not matter which asset class you choose. There are three factors always associated with it, and that I call as a risk, return, and the time. You know why? Because all these asset class do not work in tandem. If one goes up, the other goes down. For example, let's say the equity as an asset class can do really well over a long period of time, and but it can correct 10% or 20% with the blink of an eye. Similarly, if we talk about the debt investments, it has always have an inverse relationship with an interest rates. Similarly, for example, let's say the gold as a commodity is considered as a hedge against the inflation. But when talking about the gold investments, I'm talking about the pure gold investments, not the gold as in the form of jewelry. uh, well, I think I should hold it over here because my jokes are not that great. But what I'm just trying to tell you that when you're trying to buy a gold, buy the gold in its pure form, not in the form of you can fill the blanks nevertheless. And that is why there is a saying, that you should never ever put all the eggs in one single basket. So based on your age, income, risk-taking capabilities, you should diversify yourself in different asset class. For example, let's say there are two college graduates who had just passed out and started their professional career. Their investment needs and the asset class could be very, very different from the person who is 45-year-old or, for that matter, 65-year-old. Not just that, even if the two people belong to the same age bracket, based on their goal and their certain parameters, the allocation is going to vary for them. So what I'm just trying to say that there is no out of the box solution, but your asset allocation should be based on the kind of goal you have put yourself, in order to achieve your asset allocation is going to vary. Okay. So you need to first define your goals, as I mentioned in my last session, that short term goal, medium term goal, or the long term goal. Based on your goal, you should define the kind of asset class in which you are going to invest. And when you are investing in those asset class, always remember that no asset class is perfect. But if you bring all these asset classes together, then you can make a perfect recipe for yourself. And that's the key mantra for your success. Okay. So, as a thumb rule, what has been said that you should check your portfolio at least once in a year and do the portfolio rebalancing. For example, if the equity has run up a lot, for example, and that you can check with the help of certain parameters such as P ratio, book value, Warren Buffett indicator. There are so many things through which you can check whether the equity has gone beyond your comfort level. Then you can definitely reduce the equity exposure. Similarly, for the debt investments, as I mentioned, that it has an inverse relationship with your, interest rates. Recently, our RBI governor has paused the interest rates, so you need to relook into the debt investments. Similarly, for example, the gold has run up a lot because of the uncertain economic condition throughout the whole globe. So you need to relook into the gold investment as well. So what I'm trying to say basically is, first thing first, define your goal. Second thing, based on your risk taking capabilities and time in the market, you should define the asset classes, you should do the investment into it, but you should keep checking and keep an eye that how these asset classes are performing from time to time, and whether they are aligned with your goal or not. So with this, we come to an end of this video. I hope I was able to clarify the concept of asset allocation and the importance of diversification. Please do let me know your thoughts about the asset allocation by putting the comments into the comment section of this video. And if you really like the content of this video, please do like and subscribe to my channel and share with your friends and family. I will see you next week. Till then, stay safe and stay healthy. And thank you very much for your time.